China's GDP grew by 8.1% in 2021, higher than the around 6% target. That's according to the National Bureau of Statistics at a press conference in Beijing that just wrapped up moments ago. Other key figures from the conference are a historic high in trade, imports and exports, record food production, and creation of over 12 million new jobs. So what do the data say about the state of the Chinese economy? What are the risks to watch out for in 2021? And what's the forecast for this year? I'm pleased to be joined from Shanghai by Professor Ning, Deputy Dean of the Shanghai Advanced Institute of Finance. Professor Zhu, thank you very much for joining us. So how do you interpret the key numbers coming out this morning, namely 8.1% growth, higher than the around 6% target, and also for 2 years average of the past 2 years, it's about 5.1%. How do you look at that?
Well, I think the numbers are, first of all, very encouraging and very reassuring. I think the global economy is looking very heavily on what China has been doing in the past year. And I think China has delivered a far better than expected growth number, which is very important to the global economy. After all, I mean, China's economy is contributing to about 28% of the global economic growth. So I think that is the most important number to take away. I think the second part of the number is for the 2-year period, the number is gradually coming down to about 5.1%. I mean, this is in light of the COVID situation, this is still much lower than the above 6% growth period before COVID. So this is also saying that China's economy is going through an important and high quality growth and transition. So I think that is also something which the world and the global economy is heavily looking upon.
It is interesting because besides telling people that, we achieved 8.1% growth, it emphasized that if you added the past 2 years together, it was an average of 5.1. What did the authorities want to tell the world by doing this?
Yes, I think the past 2 years are quite unusual in human history and in global economic growth. So in a way that 2020 was such a slowdown or recession year for most countries. And so it is very difficult to interpret the growth in a single year framework. That is why I think it is important for the entire world to look at not just China's economy, but the global economy in a sort of a 2-year average framework. But no matter which way you're looking at it, I think China's economy is growing much stronger than expected and also grow much stronger than most major economies around the world. So this is, given China's size already, I think this is very important and encouraging to the global economy. And also this is paving the road for further structural reform that's going to take place in China in the next few years.
Help us understand exactly what made it possible for China to achieve such extraordinary growth despite the pandemic and the heavy restrictions and the disruptions the local outbreaks have brought to local lives and production.
Well, I think the fighting or the prevention of COVID spreading in the country is probably the most critical and fundamental condition that we have to achieve before we can maintain the economic growth in the past 2 years. I think this is a fairly impressive and significant achievement for Chinese government. And in terms of the economy, I think the export or the trade sector is the bright spot in a way that, well, it is quite surprising that China's export has achieved a record high in 2 years straight in light of the global recession or the global slowdown. So I think this is quite important. And this is largely thankful to China's efforts to contain COVID and for the resumption and safeguarding of the continuation of production and work. So I think this is quite important. That being said, we have to keep in mind that consumption, which is going to shoulder the heavy lifting of China's growth going forward, is not as optimistic as people have been hoping for. I think partly it is related to the COVID, of course, it's limiting some of the consumption scenarios, but we also have to pay close attention to what's trend going to continue, because consumption is going to be the major driving force for China's economy to keep growing in the next decade.
Right. The National Bureau of Statistics said three main drivers for the growth were investment, consumption, and imports and exports. You mentioned import and export. Let's take a closer look. For instance, the numbers released today is that China's foreign trade reached a record high of $6.05 trillion US dollars, import and export added together. That's surpassing the $6 trillion US dollar mark for the first time. Among it, exports were up by over 20%, imports were up by over 20%. So a double happiness, if you will. How is China able to register such an impressive growth in terms of foreign trade?
Well, again, I think the first thing is that we have a steady and safe production environment. The second is I think China is really enjoying the very comprehensive and whole-scale production and logistic supply chain. I think this is very important. I mean, more and more multinational companies and demand countries have come to realize that China is one of the very few markets which can deliver something in light of all sorts of external shocks. So I think this is giving China a very clear edge over many other economies. And lastly, I think it is quite important to see that I think China's domestic market is supporting the continuation of many manufacturing companies. I think the maturity of the labor force and also the improvement of companies' R&D skills is also putting China's economy further and further higher along the supply chain. So I think there is an upgrade story, the China design, the China brand story, which is playing out more and more gradually over time.
If you break down the number for the last 4 quarters, however, it's a very uneven picture. For instance, for the first quarter of 2021, the growth was 18.3%. The second quarter was 7.9%, and the third quarter 4.9%, and the last quarter was also 4%. So it's a very clear downward trajectory. Are you worried that China's economic growth momentum may slow down further in 2022?
Well, the short answer is it's very likely to further slow down in the first 2 quarters of 2022. But still, let's not forget a large part of that is the so-called base effect. The base from 2020 was very, very low in the first half, which is why part of the reason the numbers were so strong in the first half of 2022. But let's not overinterpret that. I think what is more important is the following two considerations. One is the policy on real estate, which is contributing to about 20% of the GDP growth single-handedly and contribute to about a third of the China's national economic growth on average. So what's the policy going to look like for the real estate sector? Will the investment related to real estate and infrastructure rebound strongly? I think that is one very key factor that is going to determine the economic growth in 2022. And the second factor is, of course, the global recovery. I think China has benefited very significantly from its trade or export in its GDP composition. And will the global economy rebound? Will the Federal Reserve taper off faster than people have expected? Will the rest of the world also get rid of COVID by the end of this coming year? I think those are also uncertainties which are going to have a very big impact on China's own economic growth in 2022.
Of course, all eyes were on China's real estate property sector in 2022, and you predicted way earlier in 2016 that China's property market could not continue the untrammeled growth like in the past, and it could face major reshuffle, even a nosedive. And analysts have cautioned a prolonged downturn in China's property sector that might hit the economy and trigger a financial crisis. Standing where we are now, how worried, how concerned are you that your words may come true?
Well, I have commented earlier in New York Times saying that, well, even with what has happened with Evergrande, I don't think it is China's Lehman Brothers time. I don't think it's there's much comparison between what's happening with Evergrande with what has happened to Lehman Brothers during the global financial crisis back in 2008. I think there are two important distinctions between China's scenario and that of the West. One is real estate in China is not highly tradable, so it is not going to be reflected in either a stock market or bond market very very quickly. The second is, I think the government has a much stronger influence and resources in solving such kind of short-term shocks. So I think we have been seeing what has happened to the real estate sector in the past 6 months. I think the government is already gradually stepping in to salvage or to save some of the really urgent situations in the real estate sector. But if we look a little bit longer, another 3 to 5 years down the road, I think real estate is still one high risk profile or area for China's economy. I mean, with what has happened with Evergrande, we have been seeing that, well, the entire real estate sector is highly contagious to the financial sector. And ensuring financial stability is a very important assumption for China's economy to keep growing sustainably in the future. So I think this is very important.
Yeah.
The second is, as what I have been advocating in my book and also in the past few years, is the government have to gradually taper off its guarantee to the real estate sector.
All right.
Because in China, it's still pretty much everyone believes real estate is the best money-making investment they can have.
We have to leave it there, time being very limited. Many thanks to Professor Ning, Deputy Dean of the Shanghai Advanced Institute of Finance, for your very special insight on the economic performance of China.